Good morning, SMF Street Traders. It's a Thursday. It is right now 8:14 a.m. Pacific Standard Time, and this is a Google chart that's in your SMF platform. So basically what we have done here today, yesterday we bought off of these bottoms, as you're aware of. These this is a market maker platform, and you got in and it came up today. And, it's been sliding that bid. When we look at your intraday, that was over here when it was making tops the previous day. Slide that bid, slide half that bar. There was that gap down to that low today, and there was that nice burn that told you in the system right here as you were getting the voice alerts, as you were getting all your mathematical equations that establish trend directions, is we're happy to announce that we are taking a different view, meaning that for the new MMTs that are here, but some of the ones that are in the group, you've been involved in trading Google on its earnings. What we've done in the last 6 quarters, over the last 18 months, every quarter is 90 days or 3 months there. So basically we've always bought it, and we've always sold into the day or the day before that it was going to report. And once Google reported its earnings, what would happen is that it would take a significant fall in after hours. And it did that 6 quarters in a row. This is a new quarter, the October quarter, and what we are currently doing is we're taking positions right here. I'm going to pull up some of the positions that we're taking on the call and the option side and whatnot. MMTs, what we have done here is let's take a look at these options. This is a $480 put that we purchased this morning. The position that you can see over here, it tells you position 5. Okay, and they're going to report earnings. Our price is $2.10. That's a $480 put for the month of November MMTs, and we got that at a wholesale bid. And they're 245 by 260, and the position is 5. Open P&L there's 175. But more so of a gift, MMTs, is that over here, we bought the 550 call for November. The high was $17.20. Our entry right here is $14.60. We really believe that the earnings cycle is going to change. We've already had 6 quarters of buy the rumor, sell into it. We've done that, but now we're taking a new approach in this particular quarterly earnings. And basically what we're doing is we're buying and we're going to hold. This is the November 550 call. We got wholesale. Our price is $14.60. The retail prints are up here above $16.30 and $17.20. That's the retail entry. So we had a very good cost savings. If you take the high and you back out our entry on 5 contracts, that's how much we saved. That's why we're wholesale there. Now, on the other hand, we have a 550 call that expires tomorrow morning, 10/16/2010, 560 call. We own these at $7.10 is what we paid for them. Because we had bought these a couple of days ago. Yesterday's high was $5.10. But MMTs, the lesson that you want to learn here is the same $510 put is being bought 5 contracts over here that expire tomorrow morning. Now, I believe that Apple or Google's probably going to gap up to at least 575 on a good earnings report today compared to the other quarterly earnings that we've done with MMTs. And remember, the reason why we do the live trades entries is because no one can say, hey, you don't know what you're doing. No, it's all right here, MMTs. But my point of it is the risk management MMTs is if this thing drops, I'm protecting this money here because they expire tomorrow morning and Google reports earnings after the close. So if I lose money over here, that's fine. These will go way up in value, but I'm managing my risk. Even though that my belief is what it's going to do, I'm still going to manage my risk. So basically, when I got the 550 call, that goes out another month for the options expiration. I've got lots of time over here. But just because, and I really believe that we're going to have a great earnings report. But just because I believe that MMTs is not going to take me out of my risk management. And my risk management is I came over here and I bought the 480 put again with the idea that I hope I lose every dime. Because I've got put options for tomorrow. I've got call options for tomorrow and November. I would love to lose this side, every dime. But then I cash in big here. So what? I hope I lose this money. And I hope I lose this money. And it won't hurt me because after I do my cost here and my cost there and what my gains are going to be here and what my gains are going to be here, then I subtract it and that will be my net profits. And Google right here, and you can see the open positions right here. 5 of them, we own these at 710. Okay? Yeah, but we bought them early in the week to hold through the earnings. And we got these here, put options, a 510 put. In case they gap this thing down $30 or $40 as well, which I don't see happening. But if they did, well, I'm going to cover this money right here. My capital dollars at risk is about $3,550 here. And my entry over here, these went up to $7. And these went down to $1, I'm going to, the downside is going to protect my risk capital here. So I'm going to do the best that I can to manage my capital that's at risk. Okay? And it doesn't matter that I changed and put a buy rating on Google and that Google's in a beautiful new bull trend, because it is. MMTs, let me update you on the bull trend. MMTs, I'm proudly to announce to you that we have live videos and entries that we were doing here, and I told everyone at that time that we were a new bull trend and we got above that green weekly 200 weekly moving average, and we've been burning ever since. Another thing, MMTs, about this new bull trend, Google has closed above the 10-week moving average 1 week. That's the blue line, MMTs. 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. It only takes 4 weeks above it, and it takes the blue line crossing and going up higher in value. We've crossed over the 20-week, the 200-week to the upside. We're above the 50-week moving average, and all of these were trades that we've been doing all along, MMTs. And we've been doing it because of that bull trend. So basically, once again, just to reiterate everything, is that we had a significant bear trend, and we were in a bear trend for a long time in 2010. And Google has not performed the broader market, and that's why we're changing our strategy. But because we believe, even with the bull weekly buy signal now, Google's been in a weekly sell signal for weeks. It's finally back to where that weekly buy signal, MMTs, could push this equity much higher, and it's got support. You're above that 50-week. This is this week right here. They report earnings after the closing bell, and we are in a bull trend. And we've got bull calls. But nonetheless, MMTs, we're still managing our dollar cost capital risk for the quarterly earnings report, MMTs. And here's the name. Here's all of our positions right here. We've got 5 positions right here. And we paid $210. That's the put side making money. We bought the call side, $550 call against the 480 put. Right here, we're up $800 there. We got wholesale bid. 60 pennies off the low, live entry. Look at it. The evidence is there. So if you don't want to believe that SMF knows what they're doing, we do know. We do it because we do the live trades. We give the earnings analysis, not after the fact. Not after the fact, everyone. Before the fact. And what these earnings are going to do today in after hours is that Eric Schmidt said that we're going to have a slowdown for the next several years. But Google's been capitalizing on its search. It took market share away from Yahoo again, and it's taken market share away even though that this last quarter was slow. We hit a slow spot, a deleveraging spot, during the summertime, but we believe that Google has executed well, and we have been buying it on this weekly chart over here with our MMTs ever since we broke above that 200-week moving average. That made the buy signal. This weekly MACD buy signal, it hasn't had a buy signal because it hasn't. It has a weekly buy signal. But just because it has a weekly buy signal and just because everything looks good does not excuse me from protecting the other side of this money and having the put options. And because MMTs are not taught to be greedy, but if I make $10,000 here and I lose $1,000 there, I still make $9,000 there. If I lose my position here, if I lose $1,000 on the 510 put, but the 550 call that we paid $7.10 for a couple days ago, yesterday, it just, marks to market it, but that's our cost. The thing about it is, and these go up $7 or $8, and I make $3,500 or I make $4,000 here, and I lose $1,000 here. I still make $3,000 on tomorrow's expiration after I back out my losses. MMT, once again, it's a pleasure of taking the risk management road, and even though our belief is strong, I will see you at the cash register.